Good day, Malaysia. Live and prosper. I'm Logeswaran. I'm a wealth planner with Wealth Creators. There's a myth for new home buyers that MRTA is mandatory, which is not. MRTA is optional. It's good to have, I agree, but there is something called alternate MRTA. That's the market that many of us, especially young home buyers or new home buyers, do not know. Before I proceed further, let me just explain what is MRTA and what is alternative MRTA. MRTA, which offered by banks, conventional banks, is mortgage reducing term assurance. What it does actually is that when you buy the property, your mortgage reduces as well, and the MRTA you take up with the bank reduces following the level the mortgage is. Compared to an alternative MRTA, which is we offering, not only maintains the cover level, it also pays you excess than the actual mortgage value. This doesn't mean that you must not take MRTA. It's good for you. Point number one, you have total control. When you take an MRTA with a bank, it's their terms, their conditions, and the nominee most likely or will be bank. But when you have alternate MRTA, key things that you can have nominee on yourself or anybody choose to have, and also you can actually change the plan itself. You can upgrade, you can change it to another format, you can have, importantly, cashback. Point number two, now transferability. That's a very strong point which you have with alternative MRTA. What does transferability means? Simply put it, if you take up an conventional MRTA with a bank, what happens? When you refinance, which you're most likely going to do, that with another bank, the MRTA which you have with your current mortgage will cease to exist, and you have to get a new MRTA at a new price. Or what if you refinance again, a third time? You notice that the trend now, there's a lot of leakage goes from first bank to second bank to third bank because the MRTA is tied up with the mortgage. Now, compared to what we're offering, which is the alternative MRTA, it's tied up to your life. So you can refinance not one time, two time, three time, you can refinance as much as you want. You actually have the same MRTA policy. Point number three, one too many. What does it mean? When you take up an conventional MRTA with a bank, you only tied up with one mortgage, one MRTA plan. But with alternative MRTA, you have this beautiful feature where one MRTA can cover as many property you have. Not one, two, three, name it, you can have it. Because this one MRTA can be flexible to manage not as much property that you have with a single plan. Thank you, Malaysia, for your time. Live and prosper. If you'd like to know more about the alternate MRTA plan, call me right now.